welcome to another video from Candlelight Trading. What I've started to do to try to add more value to my room, in addition to ongoing trade analysis and chart analysis that I do in the room, I'm going to be starting, or have started actually, some additional training sessions that we're going to do once a week for all my members, pre-market. So we're going to do it from 7:30 a.m. to probably around 8 or 8:15 a.m., whatever it takes us. In which we actually go through practice trading together. And I think that will add more value to the room. So in this little short video, I'm just going to play a snippet of our first training session that happened this morning, and you'll be able to hear some of what we do. Just please remember, visit www.candlelighttrading.com if you want to find out more or join the room. We'd love to have you. Also, please like my video, and also please share my video so I can get the word out to as many people as possible. And also first take a couple of minutes or a minute or two and read the disclaimer. Remember that trading carries a high amount of risk. Please never risk more capital than you can afford to lose. And that means anything that would change your current lifestyle. And enjoy the video. All right, enough of that. Here we go. If I get a little green body candle that holds, okay. So I got a doji here. Whoop, hold on. So I got a nice little doji here that held right at VWAP. I actually at this point would probably be buying on this pullback on this little wick here as it pulled back in. We missed that, but as it pulled back in, I'd be buying because 2 candles in a row now I have a wick that's held VWAP. If I call that, you'll hear me sometimes say I got double wicking. If I've got a double wick that holds VWAP, I'm gonna start. My bias is gonna start to be long, and if I can get in as close to that as I can, and my stop just underneath it, it's a relatively low risk trade. If you want to wait for confirmation, it would be when this bar here takes out the high of that prior bar. So that prior bar's high is 29.1375. So we'll say 29.14 is technically where the entry is. Now, unfortunately, when you play and replay, the dome doesn't replay too. So you just have to hit the buy button. So I'm going to hit play here and see if I can get in on it. All right, so we did break it. So I'm in at a bad price. Well, actually, 14. I'm in right at the right price. My stop needs to be below this pivot low. All right, so I'm going to put a sell stop right underneath there. So currently, let's stop this a second. So what I have to look at is I have to look at, if I'm going to add to this position at all, because I only took 1 contract, I don't ever want my risk to be higher than what it is when I start. So right now, my stop, and actually because this is when you have a big bodied bar like that, I can move my stop to below that low. So the low of that bar is 12.75. I can move my stop to 12.50. So it's 12.50. I'm in at 14. My stop is 12.50. So I'm risking 1.5 points. All right. So no matter what, if I'm going to add to this position, I never want to be risking more than 1.5 points. That's the bottom line. You never want to add to a position and increase your risk. You want to add to a position and either keep your risk the same or ideally reduce your risk. Okay? All right, so now we'll see what happens. So now what I'm going to be looking for is I'm going to be looking for one of the patterns that I talked about in the document, either like a potential little rising 3 pattern or a little red bar ignored or a little sideways consolidation, something that allows me to add to this position. All right. Now, my stop, I don't really have a new like pivot low or anything, but the thing is making a big move. So do I still want to risk this much? No. So what I would do at this point is move my stop to just a little bit below this little wick here on this. If we went to a smaller time frame chart, because this is a 3-minute chart, realize that that little wick there could very well be a little, it was a little retracement. It was a little point. Whenever you see wicks, that's a little point where sellers tried to bring it down and then they couldn't. So I can hide behind those. So that low is 15.75. So my new stop is 15.50. So right now my risk is a profit of 1.5 points. Okay, it's a profit of 1.5 points. So I'm still looking for any kind of an opportunity to add to this. And on a 3-minute chart, you're going to get less little opportunities than like on a tick chart where you'll have more little red bars. But we're still going to watch for 1. All right, so I'm getting this pullback here. Now, if I had multiple entries to begin with, if I had more than 1 lot, I would always trail 1 bar by bar. So if I had 2 lots, I'd keep 1 stop where it is, and my other stop would be bar by bar. So it'd be just below the low of this prior bar. So if this here bar breaks that bar's low, I would be out of the 1 contract, and I'd still be holding this second. I only took 1 on this trade. We could have practiced with taking 2. That's where I think the micros are going to be great, because we can do 3, 4, 5. You know, it'll be really nice, and you don't have a huge risk. So, but today we just did 1. So we'll just see what happens here. All right, so that first one, yeah, so that first one would have been out if I'd have had 2 contracts. Now, notice how we came right down to our exit signal line. That's what I want to see. Even if it dips below it a little bit, you know, I want to see it somewhere around in here. I want to see that buyer step in again. If I have an incident, an opportunity where I have a little green bar, or a little bottoming tail, or something like that, then I can look for another entry to add another contract. So, yeah, with the micros, you mean? Yeah, because if you do this with a micro, you could start out with, like, say, 3 lots. Each micro is $1.25 per tick. So, you know, your risk is really small. If you do 3 lots, then you're moving, what, $3.75 per tick. Still less than the 12, obviously, but then you have room to add, and et cetera, et cetera. You could start with 5, you know, it would be like a half. So it's nice, and you can kind of do a little add and reduce a little better. So I'm looking forward to that. I just hope there's enough volume in them, because they'll be good for that. All right, so I'm starting to get a little green bar here, and I got to kind of watch what is the high of this bar. So the high of that bar is 1750, okay? If we break 1750, I got my hand on the buy button, that would be a buy. So there it is. So I added a second contract. Now, you'll notice that puts my cost up here to 1588. All right, I have to add in another stop. And when you get an add here, your stop needs to be just below that pivot. So, although my profit isn't quite as big, I'm still in a no-risk situation. That's what you want to make sure, that you're in a no-risk situation. So I now have 2 contracts and a minimum profit of about 3 ticks. So we'll see if this goes any higher. Now what you can do is you can take that second contract and trail it bar by bar. So I'm going to bring the second contract stop to below the low of this red bar here. So I'm going to trail this one bar by bar, and this one I'm going to leave back here by the price pivot. All right, I've got another bar. I can now trail this second contract by that bar. This one I'm going to leave, although this does form a new price pivot here, so I can actually bring this one up too. All right, let me bring that one up to that bar, and that forms a new price pivot right there, so I can bring this stop up to below that. All right, so let's pause that and make sure you understand that. So do you see what I did there? So we had another buy setup where I added, gave me a second contract, and I was able to put my stop in a no-lose situation, right? Then the second contract, I'm going to trail it bar by bar. In fact, now I can actually move it up to below this bar, okay? And this contract, I'm kind of watching where there's like any kind of a little price pivot, any kind of a little retracement in the ability, and I'll follow by those. That make sense? Okay. All right, so let's see what happens here. So once this bar closes, I will move the stop on the second one up to below that bar's low. All right, and there we go. Now, my other line in the sand, although this is still sitting below this price pivot, you know we talk about a close below the exit signal line. So if I get a close below the exit signal line and a break of that low, then that would be an exit too. All right, and Toby has been telling us all along that, you know, obviously our bias is to the long side, and we're on the right track here. So. So this allows us to build into a position, and we never really added to our risk. So that first one just stopped me out. My second one is still sitting way down here, my stop. But again, I'm going to watch this exit signal line and make sure that, you know, it doesn't get back too much. Now, I can start to look for another ad. What I don't like is that this candle here, and if you look at the PDF on the candle math, it'll talk about like these wicks and a retracement of a bar. This wick here retraced about half of that bar. I would say that's approximately half of that bar, right? Would you agree? So once price retraces about half of the bar, that shows that that bar isn't so strong anymore. We're starting to get some weakness in there. So for me to do another ad, I mean, if I get a nice little bottoming tail right off of the exit line, you know, and it's enough, it gives me enough room to get back up there, which I guess it kind of does. Let's see, this is around 1950, and that high is about 2250. So yeah, that's a couple points. You can do it, but if it doesn't retrace deep enough to give me room just to the high, I don't want to do another ad, because when I have this much of a wick, I know that that could be a little bit area of a struggle. That's where obviously sellers stepped in there and they kind of won, right? So we got the pullback and then they continued. So do I really want to add another one? You know, I don't want to add another one too close into that. Now, if we take out that high, that's a different story. That means the sellers tried and they just were killed. So let's see what happens. All right, so here's a little bar, but it didn't come in to me close enough. Like here's the entry would be at 21, and that high was 2250. I mean, you could do it, but to me, it's just not quite enough. I'm not going to add, but what I will do is I have a new pivot high. So this stop is going to get moved up to that pivot high right there. And now actually it should be below it. I think I'm right on it. I want to be a tick or so below it, a tick or two below it. So now here's the question. Are we going to be able to take out this wick? If we can, actually that's not a bad ad. I know it seems like you're adding, you know, on the highs, but it's really not a bad ad if it can take that out. But it's struggling to take that out. So we'll see what happens. And that's it. All right. So not bad, not a bad trade, 390 bucks. Okay, so I hope that you enjoyed that video and that you were able to learn something. All of the strategies and the techniques that I talk about there, we go much more into depth in the room, and there is also materials on the members page that explains, you know, the strategies that I used there and more. So we go more into depth in all of that. So check out my website, www.candlelighttrading.com, and I'd love to have you join us in the room, and don't forget to like this video. All right, have a great day and see you soon.